The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Well, good afternoon, everybody. This isn't Esther. This is Chris Fabian. I can try to be Esther. If I talk like this, I don't know if that would pretend to be Esther or not. But it's still EG Tax. We're here to help you. We have, it's now 2019. New tax laws. People are finally going to go, wow, they're finally here. The tax laws. Well, they've been here for a year, and that's we're going to dissect what to expect when you're expecting this week. What's in store for you for your taxes, what to do before, what to do after. We're going to help you. If you have questions, give us a call here, 803-0930, 803-0930, star 930 on your cell phone. You could also even text in at 3930. We will take your texts. If you guys don't ask questions, no one's going to answer them. So give us a call. And like I said, I'm Chris Fabian from EG Tax. I'm here in studio this week with Tim Eliason, our marketing director and healthcare guru for EG Health Connect.
Thank you. I'm happy to be here, Chris.
Thanks for coming in. And these tax changes, we listen to our jingo, new friends, new opportunities, new partners. I think we got to throw new tax laws in there.
It's been fascinating. Even with the individuals that we're talking to and assisting the phone calls, individuals, we're happy to help them, the ones that have done the taxes themselves. This is the first time that most of them have seen a new tax form since 1986. Yeah. And they're coming in confused. How do I do this? What do I do this? What's this? What's that? I mean, it's, not only the tax laws, but even the procedure for putting the returns in, filing the forms. It's a lot, and everybody's asking for help.
Yeah. I mean, where's the 1040A? How come I can't find a 1040A? Mm-hmm. Because there is no more 1040A.
Yep.
It's all on that 1040, the abbreviated 1040. Mm-hmm. And, I know when Channel 7 came in this week and was doing a story asking about the tax changes, and he said, isn't this simple? I said, yeah, here's the old 1040, and it was 2 pages. Mm-hmm. And I showed him the new 1040 with the additional schedules, and it's 6 and 2, 8 pages.
8 pages long.
8 pages long. And Ed was like, I thought this was easy.
Well, using the word pages is kind of
oxymoron.
Yeah, because it's printed on a full-size piece of paper, but some of it is no more than a couple inches of the paper that's actually being used. So the forms are going to be a lot different, the way that they flow. I know you and I talked the other day, even between ourselves, we're so programmed to refer to a specific line on the tax return that somebody says, well, what line is that? And we kind of, let me double check because the form is so different.
Yeah.
What it does, we know the law, but it is just different. It's different.
It's going to take a while for even us to get used to the numbers and where to go on the tax return. And we do this for a living. I couldn't imagine doing it once a year. I wouldn't want to. I'm not just saying that because we are.
All the residual effects. I was thinking about the other day when I was helping somebody with the STAR. All those pages and papers that they've probably printed, they mailed out to everybody. Hey, go look at line 37 on your 1040. Also now there is no line 37 on your 1040.
They have to revamp that whole STAR application.
Yep, exactly.
Yep. So this is going to change everything. But, like we said, what to expect when you're expecting. We all heard the news. IRS is turning on their computers on the 28th. Mm-hmm. What does that mean? We're open.
Yep.
Don't wait till you hear the IRS is on. You can come in now. As long as you have your W-2s, you have your information, we can get your taxes done now. Don't get caught in the bull rush.
Well, and you said it the other day, like you were talking about in the interview that you did. Get things ready, get it done now, and get in line so that you can get it in early because, again, we're in uncharted territories. We don't know how the filing season, how the IRS is going to work. Are the forms, is everything ready? The sooner you get it in, the sooner that anything that needs to be worked out can be worked out and make sure that we get your refund to you timely.
Right. We're EG Tax. We want to help you. 803-0930, 803-0930, star 930 on the cell phone. But let's look at the basics. W-2s. When do companies have to get their W-2s?
W-2s still are due at the end of January. Some people can get them earlier. If you have an electronic service, they may be sending you something that you can. But, most of the time, all the W-2s, really the tax document that most people see, end of January. They're going to start to see that.
Yep. So just look out in the mail. If you don't get them in mail, if you're waiting, ask your employer, was I supposed to go online and download them? Mm-hmm. Because sometimes that's what they're doing, a cost saving. 1099 interests, that's end of January. Mm-hmm. You're supposed to be getting your not your bank statements, your interest statements from the banks by the end of January, beginning of February. But unemployment, when do you get your unemployment?
From the state of New York, I think they use the term that the check's in the mail, maybe. But, that's a form that they no longer mail to you. It's something that if you do your filing for unemployment online, you have to go online and print it. If you're somebody that's using the phone system to do your unemployment, you have to call and ask them to mail it to you. It's no longer a document that comes to you automatically. So that 1099-G does not come automatically anymore.
Yeah. So with unemployment, you're not just going to get it in the mail automatically. You got to go on the computer, download it, or you got to give them a call, say, can you please mail it? So you could be waiting a long time.
And, you don't need to wait for that. I have done 4 or 5 at least returns for 2018 already. Some people have come in with their last pay stub of the year. We've kind of sat down, run the numbers, get things all ready to go. Obviously, until we have the official tax document, we can't do any filing. The IRS is not open, but people are interested. And I guess I wouldn't say concerned, but the anticipation is saying, how's my return going to look this year? What's it going to be? And, we're going to talk about the withholding and what you need to do on that. So.
Yep. We just had the financial guys on before us. The 1099 DIVs and 1099Bs. Mm-hmm. They're not due until February 28th. Mm-hmm. So unlike your W-2s, which should be mailed out by the end of January, the 1099 DIVs and 1099Bs are not due until February 28th, if you're lucky.
Yep. And usually, most of the brokerage houses are very good and get them out by then. Some of them, depending on what things, and again, we're in kind of uncharted territory with the filing. Sometimes you might see a correction, 1 or 2 corrections on that, but most of them get them out by the end of February so that you can get in and get that stuff filed.
Right. And then, another thing people always are the K-1s from S corporations, partnerships, and trusts. Mm-hmm. Those are due on March 15th. Mm-hmm. The reason they're due on March 15th is because that's the due date for those type of returns without extensions. So if you have a K-1 and you're waiting, call the person, say, where is it? Why aren't,
Well, I thought about this while you were talking about it. The K-1s from the S Corps and the partnerships, there may be a little more pressure from people on the personal side to say, hey, you need to get this to me because I get 20% off this on the pass-through. So if they have income coming from that S Corp or their partnership, they might be a little more eager to get that because they know that they may have a tax break coming to them on their personal return.
Yep. I'm Chris Fabian from EG Tax, where I'm in studio with Tim Eliason. We're here to help you. We're going to take a short break, and we'll be right back and answer your calls. I don't know. Sounds like doing taxes is a party, Frank? Is that what you're trying to say? I said, are you trying to say doing taxes is a party?
Possibly.
Is that kind of the sound of everybody running back to the IRS to go back to work? That's that kind of upbeat sound as they're rushing back into the building to try to get their job back? So.
Yes.
Okay. Get my tax return. You want them there, right?
Yes.
Yes. Get the employees back to the IRS, because right now, if you have a bill, you can't call them.
No. And as you found out the other day that somebody went in there and turned the fax machines off.
Yeah. So you can't answer your letters. You can't talk to someone to get help with your letters. Who knows if they're even receiving the mail?
Well, I imagine that there's a mail room and there's a slot where everything's being dropped into, but I just picture this big pile of mail in the basement of the IRS that nobody's got to sort through. So
Yeah. Okay, so let's go to the phones, and we're going to talk to Norma. Hey, Norma, how can we help you?
Hi, yes. I called because 2018 was not very kind to me and my husband. We lost his mother, my mother, and my father.
Oh, boy.
Goodness.
But we finally got everything cleared up as far as, insurance, selling the house, the lawyers, just splitting money and all this craziness. But I had got an inherited IRA, one from my father, one from my mother. And do I have to leave it? How do I change it over? What kind of taxes am I going to have to pay? Because it's not a cheap, it's a significant amount of money in there.
Yep. Well, with it being an IRA, or even for those listening, if it was a pension too, because you're the non-spouse, you're a child, okay, you have three options. You can take all the money right now, okay, and then you would pay tax on it all up front. You could take it over. If you don't do that, you have to roll the money over into a beneficial IRA. So you could go to your bank, you could go to the financial guys, you could go anybody who handles IRAs, and they would turn your mother's and your father's IRA into your IRA, but it has to have the distinction of being a beneficiary IRA. So meaning to the IRS, I inherited it, okay? So then your other two options are, you can, like I said, you take that money all up front. That's too much, I don't want to do that. You can then take it over 5 years, okay? Or you can annuitize it over the rest of your life. Okay, so depending on how much money we're talking about, you got to run the numbers and see what's best for you.
Right. Now, here's what my husband wants to do, which I disagree with, because between all three parents, we have a significant amount of money, and he just wants to put it somewhere where it's going to get like 3% and tie it up and everything. I said, well, we can't do that because for one thing, what if we need it?
Right. Well, if he were to take it out of the IRA form, you're going to pay tax on it. So I know you said a significant amount, so I'm going to use $100,000 as an example, okay? So if it was $100,000, we have to add that to all your other income. Okay, so then you're probably at 27%. You're going to pay 27% to the federal because it's going to impact your Social Security as well. So you're going to pay a lot of money. You're going to pay 27% to get 3% growth. Well, you could just move it into that beneficiary IRA and put it in the same fund that your husband wants to and get that growth without paying tax on it until you take it out.
Well, that makes a heck of a lot more sense.
Yep. So I would if you want, call us on Monday at 632-7886. We'll run the numbers. We can give you a couple names and numbers of some financial people that you can call.
Yeah, we've been to a couple, but, honestly, it's just so confusing that we keep just staring at each other.
Unfortunately, it can get very confusing. That's why you want to find that right person who can talk to you as I'll say, like in English instead of financialese, okay, that you can understand and know how your money's going to be invested and how easy it is to access if you do need it.
Right, and then I found out that, another thing is I found out that I've been paying, for insurance for a very long time, as has my husband. I have like a $25,000 buildup of $25,000 cash.
Oh, in your life insurance?
In my life insurance, which I know I have to take it out within the next year or two, because if I don't, my life insurance, the end of it comes, and then I lose it all.
Okay, yeah. So you really need to sit down with the financial person and go over everything. So why don't you give us a call on Monday, Norma? Ask for Chris, Tim, and we'll give you a couple names and numbers. Okay?
All right. Thank you very much.
You're welcome. Have a good weekend, and sorry about all your losses. Yeah, wow. Could you imagine losing 3 parents?
3 in 1 year. That's,
wow.
Just not only like you're bringing up with her to sit down and listen to somebody that wants to hear what she has to say, but sorting through it. I mean, sometimes just sorting through all the financial things that happen when somebody passes, but doing 3 of them and trying to keep them all. I mean, you're distracted enough that it really starts to wear on you, but our thoughts are with her.
Yep. And then we got a text question. On a Schedule C, line 24B, standard meal allowance, do I enter 50% of the amount or the standard meal allowance on the 24B or the entire amount?
That's the 50%. And I applaud the individual that typed this because you were good enough not to put in there meals and entertainment, because they have removed that. So yes, you enter there the 50%. That was something new for 2018 on that Schedule C, is that you cannot combine meals and entertainment. If you have that as an expense, you have to take the entertainment portion out of it. So you can only do meals, and then once you determine meals, then you take the 50% for 24.
And you got to make sure you are discussing business on it.
Exactly. It's that meal is not the drive-through at Tim Hortons every morning to get your coffee and donut on the way to work. You have to be sitting down for a business function.
Yep. And that leaves us to something else. While you're waiting for everything, do your bookkeeping, because this year you need 2 sets of books. If you're an employee, if you're self-employed, everything is pretty much still the same. But if you get a W-2, so you're an outside sales, an over-the-road trucker, whatever, you could, where you write off your cell phone, you have union dues.
I am very, very surprised that there's not more uproar from different professional organizations on this. I can think of 4 or 5 clients that I have that work as flight attendants or pilots. They come in with the 2106, the business employee. They come with it, and their employer, the airline, prints it right out for them. So.
Yeah. And so for them on the federal, it's not deductible.
Nope.
But New York State,
they're going to get to deduct it. It's like we're living in parallel universes, 2 different worlds.
Yeah. So if you're an employee, no more union dues. Which I can't believe, first of all, unions aren't up in arms over that.
Yes.
Because how many clients have come in and say, well, at least I get to write off that $2,000.
Well, and some of them, especially with unions, their pay structure is set up such that, they're paid a certain rate, but out of that comes union dues that they're hoping they can recoup on their personal income taxes.
Yep. So union dues are gone. Cell phones, no more deducting your cell phone. If you're an employee. Okay, computers, you buy a laptop, you buy an iPad, a tablet, you can't write them off anymore. Your travel, so if you have to fly to a conference, you can't write that off anymore.
Yeah, W-2 employees, there's a lot of things.
Yep, continuing educations, per diems, like Tim was just saying for the airlines or the truck driver, client gifts. Isn't deductible. Your mileage, driving to and from places, can't deduct that anymore.
Even those employees that maybe, weren't getting, that maybe got a small portion of their mileage reimbursed, they can't write off the balance to try to, get, that becomes an out-of-pocket expense that they can't. There's no way for them to recoup it on the tax return.
Yep. Your office in your home, your broker fees. If you pay your broker 2% or 1%, you used to be able to deduct it against the federal. You can't anymore. The tax prep fees that everybody always asks us, did you get my tax prep fees? Well, not on the federal, but on New York State I did.
Yep.
I mean, it's so confusing. You need 2 sets of books, one for the federal and one for New York State this year. So if you guys out there, if you're going, what are they talking about? Give us a call, 803-0930, 803-0930, star 930 on your cell phone. We're here for another half an hour. Our offices open up a week from today.
All the satellite offices they'll be manned. We spent the last 2 weeks, many hours with all of our tax professionals at all of our offices, really getting them up to speed, and they know the law. They know what's going on.
Yep. So they'll be there starting Saturday at 9 a.m. You can start giving all the offices a call. We're at our corporate office right now, 9 to 5. We would love to help you. Give us a call. You can go online to egtax.com. Ask the tax lady. That email goes right to Esther, and Esther usually answers it probably within the hour.
Or sooner, yes.
Yeah.
Hi.
Her phone will go bling, and and she'll go and look, and she'll answer questions. Even if it's 2 a.m, she'll do it. Our app, I believe our app has a way.
Yep, that all the things, the app is great because it brings all of our social media, all the interviews that you've been doing with all the information that you've been disseminating. That's on Facebook. You can get that through the app. You can follow us on Twitter. There's the worksheets, everything.
Yep, and then don't forget on Tuesdays, we have Facebook Live where we give tips every Tuesday. So we are trying to get this information out to you guys any way we can. If you have questions, give us a call here in studio or at the office. We will be right back. We got a break for the news. We'll catch you on the other side, and Joe, we'll talk to you then. I think we got to start pumping this music into our offices.
This is good. Whoop.
Yep. So I'm Chris Fabian from EG Tax. I'm here in studio with Tim Eliason. If you have questions about taxes this upcoming tax year, give us a call here in studio, 803-0930, 803-0930, star 930 on your cell phone. Text it in at 3930. We're here to help you. And even, I know Medicare open enrollment just ended, but they do have the, I'll say, buyer's remorse.
If you would like, if you're not happy with what you have, the doctors that are available to you, things like that, and you'd like to just kind of review your situation and see what the options are, we can talk to you about that.
And that costs?
Nothing.
Nothing.
Yes, nothing.
We want to help you. Okay, we're going to head back to the phones and talk to Joe. Hey, Joe.
Hi, Chris. How you doing?
Good.
I actually have a two-part question. First part is, are Social Security benefits taxable in New York State?
No.
No.
On your New York State return, Social Security is not taxable.
Okay. Well, what about on the federal return?
Well, you had 2 questions. This is a 2-part answer.
Okay.
On your federal return, Social Security may be taxable depending on your filing status and all your other income.
And up to 85% of that gross Social Security could be taxable. There's a cap or a threshold there.
Okay, because I do have another pension, a private pension. It's a state pension.
Okay, how much is roughly?
Okay, I have a pension that's about $28,000.
Okay, are you single or married, Joe?
I'm married.
And okay, does your wife have any income?
Yeah, Social Security.
Okay, so you're looking, because you're at $28,000 on your pension. Her Social Security at married filing joint, you take half the Social Security plus all your other income. If that's over $32,000, then the Social Security starts to become taxable. So depending on how much she gets in Social Security, you're looking, a small part will become taxable income on your federal return.
$752 a month, and I get $21.92, I think it is.
In Social Security?
Yes.
So you guys get about $3,000. So that's $36,000. $36,000. Half of that is $18,000. Yeah, you're looking almost probably 60 to 70% of your Social Security is going to count as income.
Mm-hmm.
Wow.
Yep. So if you want to call us on Monday, we can run the numbers, and because what you may want to do is contact Social Security and have them start doing withholding, so every year you don't get into a big hole with the IRS come tax time.
Right. Okay, I'll do that. Should I ask for anybody in particular?
Yeah, anybody there can help you. It's all corporate staff. We have tons of years experience. Anybody there will be able to help you. And then what's your other question?
That was it.
Oh, that was it?
Oh.
Okay.
2 birds with 1 stone. We did good there.
How much it's going to be? Well, that depends upon the other deductions, right?
Well, yeah, and the other, obviously when you go to calculate, we have to talk about what you're doing on your deductions and things like that. But that's where people have to be careful. I mean, you kind of talked about a little bit. Sometimes people forget. They have their monthly pension, they have their Social Security and stuff, but then they decide to take an extra distribution for something or other. Either they decide they want to get a new car or they need a new furnace. And sometimes that will generate that taxable Social Security. So that's where just exactly what you're doing, making that call and having us run the numbers is perfect.
Okay, I'm going to do that Monday. Thank you very much.
You're welcome. Have a good weekend. So EG Tax, we're here to help you. 632-7886 is our office number. In studio, 803-0930, 803-0930, star 930 on your cell phone. Text in your questions to 3930. And let's go to Jim from Appleton. Hey, Jim, how can we help you?
You can tell me where I can get 1099 interest forms.
Okay, so you have to send somebody a 1099?
Yes.
Are you holding a mortgage for somebody?
Yes.
Okay. So, unfortunately, you can't just print them from the computer. You can either call the IRS, ha ha ha. You can't do that because they're not answering their phones right now. Or you can try like an Office Max, Staples, something like that. You can even call our office and ask for Maria. Maria might have somewhere she'll be able to help you with that.
Yeah, because a lot of times those, when you're buying them at the office stores, they come in preset packs of 10 or 25 or whatever.
And they're good for a year.
Yeah, and they're good for a year because, you can't keep them and try to reuse them because they're all dated. So I would touch base with Maria at our office. And like Chris said, you might be able to see if she just has a single set for you to use.
Thank you.
You're welcome. And call 632-7886 to talk to Maria. We do 1099s for people. We do W-2s. So if you're a small employer and you got to get your W-2s done, give us a call. We can help you get them done, okay? Let's go back, moving expenses.
Well, I've heard some people that have had odd perspectives about things with New York and stuff like that. But, it used to be that if you moved from New York to another place for a new job, you could deduct those moving expenses.
Right. As long as you moved over 50 miles and you worked 39 weeks, you were able, on the federal, to take your moving expenses.
Yep. Not any longer. You have to be a member of the armed services on active duty and being reassigned to a new location.
Which, if you think about it, is all my years doing taxes. If you're in the military and they're moving you, doesn't the military pay for your move?
Yeah, most of them, yes.
So
I would say probably 99% of them. So, yes, kind of a smoke and mirrors on that one.
But New York State, if you're moving into New York State or you move from, we'll say, Albany to Buffalo, you'd still be able to take your moving expenses on the state return.
Mm-hmm.
Okay.
Exactly.
Energy credits.
This one's had 9 lives. It seems like every year about this time, we have our publications come out and they have to send to the printer, and it says that the energy credit for that furnace, those, energy efficient windows, whatever it may be, is gone. Then all of a sudden, 11th hour, here they come back. Right now, this one no longer. The only energy credit that exists is really for the solar and the geothermal and the wind, those renewable ones. But the ones that you used to get for the windows and the insulation of the furnace, that's gone.
As of right now, remember, last year, like February 15th, it was voted back in on your 2017. So it could still change. I know one of our reference materials, it says, unless the Congress does some change.
Yeah, that a lot of the publications, the reference books, the desk reference books that we have, and right off in the beginning in a little paragraph, it says this credit has expired as of the end of 2018 unless and barring some act of Congress to reinstate. and it says it right there in the publication.
Yeah. So tax law can change mid-year, guys.
Exactly.
So you got to keep listening to us here at WBEN, and we'll keep you informed. And we're going to go to Sue in Alden. Hey, Sue.
Hi, Chris. I just want to say firsthand, EG Tax has been doing my taxes for, 15, 20 years. I've been very, very pleased.
Oh, thank you.
Thank you.
Oh, you're quite welcome. Now I've been had a crazy couple of months. I've been procrastinating, and I'm just wondering, is there any kind of grace period if I spent this weekend making out a whole bunch of checks for charity? Could I still claim them for last year?
Unfortunately, no.
Oh, well.
I wish there was a way you could do it, but I can tell you, Sue, do you have an IRA?
No, just in the pension.
Just a pension. Okay. Because I was going to tell you, for the future, what you could do is you could set up your IRA for your minimum distributions to go right to charities every year, and you wouldn't have to worry about writing those checks. And then your IRA wouldn't count as income on your tax return, so it would be a win-win.
Yeah.
Yeah, but unfortunately, in your situation, there's nothing you can do.
Okay.
Okay.
Very much.
You're welcome. Sorry.
While I have you on the phone, I had some new windows put in the basement. Do they have to be energy efficient or any kind of window? Is it?
Well, as we were saying, that's one that, again, if we could travel back in time for you, so we could do something with it if they were making the house more energy efficient. But unfortunately, at the end of 2017, that expired. So for your 2018 tax return, anything like that, barring that you have decided to put solar panels on the house, you put a windmill in the backyard, or you dug a deep hole for geothermal, those are the only energy credits that still exist.
Oh, well. Okay. Thanks anyway.
You're welcome.
Right.
I think she was afraid to ask question number 3 because
that
she
might
didn't want to
have been true.
strike
Yeah,
out.
That's right. Well, maybe the third one would have been good because there's a lot of good things with the tax law. It's not all doom and gloom. There's a lot of things that are positive.
And energy may come back. We don't know.
Exactly. Like you said, last year it hits its 10th life was mid-February when they reinstated it with some of the other things with the mortgage insurance premiums.
Yep. Okay, let's go back to the phones and talk to Michelle. Hey, Michelle.
Hi.
Hi.
I'm just calling to ask a question about the Medicare penalty if you don't sign up at age 65. There's a little blurb on the Social Security statement that says, even if you don't plan to receive monthly benefits, be sure to sign up for Medicare 3 months before turning 65.
Well, what that penalty is, you sign up for Part A. Part A is your hospitalization. There's nothing with that, that doesn't charge you anything for that. The penalty comes in when you come into play with Part B. That's the one that's $135.50 a month. And if you don't take it when you're first eligible, unless you have an exemption, you would be required to pay a penalty for not taking it. Okay?
Exemption.
Yeah, well, exemption, a good case would be if somebody still has employer insurance and they work beyond 65, then the penalty is not something that they have to be subject to. When you go to eventually sign up for Part B, then the penalty might kick in.
You probably have to prove you had health insurance through your employer.
There's a form, I want to say it's 45 is the number on it, but you have to have your employer sign that you were covered by insurance beyond the age of 65 until that time when you're going to take the Part B. So the penalty is really relating to Part B, not Medicare as a whole, or in some cases, unless you got excess income, there's a penalty there. But, as far as what you're talking about, yes, if you go beyond the age of 65 and you haven't signed up for Part B and you were eligible and you have nothing that says that's going to prevent you from that, like I said, with employer insurance, then yes, there is a penalty.
And just so you know, Michelle, that penalty isn't you have to write them a check and give them money. It's not on your tax return. Instead of, right now, Tim said it's $135.50. You may, like at 70, sign up for it. Your Medicare wouldn't be that $135.50. It may be $223. They're going to charge you more for Medicare every year.
10% per year.
But if you are covered by your spouse's health insurance, that's the exemption.
Exactly. And again, what happens then is, when you go and, it's the case when your spouse's insurance ceases with his employer, that you go and you would then go into Medicare and you would need the Part B. That's where you submit that form so that they don't turn around. Because like Chris said, once that penalty is calculated, like I tell everybody, it's kind of like a tattoo. You get it and it never goes away.
Okay, that sounds fine. Thank you so much. Appreciate it.
No problem.
Not a problem. I'm Chris Fabian from EG Tax here with Tim Eliason. We're on WBEN. We're going to take a short break, and we'll get back to you right after the messages. Woo! Was that Ric Flair? No. I'm Chris Fabian from EG Tax. We're here to help you with your tax questions. The new year is upon us. Taxes are less than a week away. Are fun. Oh, my gosh.
Actually, they're really here.
Yeah.
I mean, you need to be getting things together. Like I said, we've had several people just coming in the corporate office just asking, hey, how do I do this? Or where do I find this? Or how do we do this? So it's, like I keep going back to what you said in some of those interviews is you need to get it done now, get it in order, get it in the system, and, we're ready to go.
Yep. Don't procrastinate. Don't wait till the last minute to do your books, because you could be missing out on a lot of stuff, because New York goes by 2017 tax law. IRS goes by 2018.
Yep. That, this is a year where complacency and just thinking, the standard deduction's going up, there's a lot of positive things. Sometimes it seems like we get the whole phrase of is the glass half full or half empty, and instead we should be saying, you got the right amount of water, you just got it in the wrong glass. We got to put it in the right spot for you so that you can get a benefit out of it.
You got too big of a glass.
That's right. Yep. It's sometimes it's not the half full, half empty syndrome. So
look at that. 803-0930, 803-0930. Here in studio, we got 10 more minutes left to answer your questions. Star 930 on your cell phone. Text in your questions. We want to help you. We know there's questions out there. Get them answered now. Don't wait. Okay. Children. If you have children on your tax return, if they're your children, the big thing is the child tax credit went from $1,000 to $2,000. That's a lot.
Well, and the other thing too is the phase out threshold. I mean, 120 up to 400,000 now for married filing joint. There's a lot of people that the child tax credit is back in play. Plus, it doubled down, $2,000 instead of $1,000 with, $1,400 refundable. So that's outstanding too.
And one thing, if you do have the child tax credit, just to let our listeners know, if you have the child tax credit, you have the earned income credit, or you have the American Opportunity Tax Credit. Those refunds, the IRS, before the shutdown even happened, has already announced those refunds are going to be delayed until the end of February.
They won't begin processing until after February 15th. Prior to the shutdown, they said that they were going to start releasing them February 28th. That's when, again, those were dates that they were approximating and say things would start to be processed and released, not when people would see that. So, for those individuals, it could be the case that it'd be early March. But I think we got an alternative for them.
We do. EG Tax offers easy advances. So if you're the person who needs part of your money now, your mortgage, your car payments, maybe it's your property taxes that are coming due. You can get an easy advance. There's low interest rates, and we can help you facilitate where you get a loan against your refund, so up to $6,000 within 24 hours.
So, if you were lucky enough that you decided to pop the question at Christmas time and you got the ring and now you got to pay for the ring, we got an option for you so that we can try to help you do that. And, the refund advance, like I said, it's based on your anticipated refund. We can put that in the system for you. And that's something, too, that even prior to the return, once it's accepted by the IRS, those things are approved within 24 hours.
Right. And, if you don't want to do a refund advance, the fastest way to get your money is a direct deposit.
Mm-hmm.
You know, I can't how many clients I have. Oh, I don't want the IRS to know my checking account number. They already know it.
Oh, yeah. Yeah, that they know that and then some. But, yeah, I mean, the gentleman that was in the other day to the office asking a tax question, the irony of the fact that he said, well, isn't it kind of ironic that the people at the IRS are going to be sending me money, but they're not getting paid? So they're not getting their paycheck, but they're going to send me my paycheck. And that's what, basically the government has decided to do. They have the IRS people back to work so that they can begin to process refunds so that the American people can get their refund money back.
Yeah, because this is their time to make money.
Exactly.
There's a lot of people who get money back, but there's still a lot of people who owe money.
Exactly. So they want those things in too. So.
Yep. Let's go to Tom in Buffalo. Hey, Tom.
Hi.
Hi.
Okay. I'm not very good at speaking, so anyways, my question is, okay, I was told that after I filed my taxes in 2016 that I no longer have to file taxes ever again in my life if my income did not change.
Okay, and that could very well be true.
Okay.
Yep. What does your income consist of, Tom?
Pension and Social Security.
How much is your pension? Roughly.
This is another thing, too. It has increased because I had a pension plan that if I died, my wife would receive half of it, but she passed away in 2017, and now they give me more, not a lot more, but I think that put me over. Well, you know what I'm saying?
Right. So, okay, how much are you getting now, Tom?
$12,732.
So, and you're over age 65?
No.
No, you're under 65. Okay. So you just barely have to file a federal return because your standard deduction right now is $12,000. So you're left with $700 of taxable income at 7%, 7 times 7. You're looking at a tax of about $49.
Oh, I mean, should I file or just have them wait?
Oh, no, you want to file because if you don't file, they're going to hit you with penalties, and because your balance due is small, they're going to double your balance due.
Really?
Yep. So you want to file it.
Okay, but now, going back to 2017 when I was told I don't have to file because, well, at that time my wife she died in March, so we had, two people or two dependents.
Right, yep, yeah. Your minimum filing requirement when you were joint, with the old law, you got $12,000 plus personal exemptions plus you were at about $19,000.
Right.
But now you're single, so it drops down to $12,000.
So I'm like taxed on $732.
Yep, something like that. Yes, sir.
Well, anyways, but the problem that I have is that because I did not file in 2017, I was getting a subsidy from the federal government through the New York State of Health for my
your health insurance.
Health insurance. Now I had the full premium because they said you didn't file taxes, and we don't know what you make. You know what I mean? So
yep, that's been something. This is really the first year that we've seen this. We've seen several people come in with this case, and it's the fact that they use the database from the IRS in New York State to look at your income when you're making that application,
right.
And if you did not file, then they won't allow you to take the subsidy or credit. So.
You would have told me that, but I bet maybe they didn't know that I was, getting a subsidy, so they didn't,
Yeah, what I'm going to say, Tom, we're getting close on time. What I'm going to say to do is call on Monday, ask for Tim. So call 632-7886. Mm-hmm. Ask for Tim. He's our EG Health Connect specialist, okay? And he'll work it all out with you to see what can be done, okay?
Yep. Right. And we've had a little bit of success. We might have to go back and recreate your return, but we've had a little success. So.
Yeah, but what if I don't have the actual what do you call it?
The statements?
Yeah.
We can always go back, and once the IRS...
Yep, we can get the transcripts, and we can kind of fight and see if we can get that back for you.
Oh, that'd be nice.
All right?
So what is it, Tim? Call Tim.
Yep, 632-7886.
7886. Okay, thank you very much.
You're welcome. And let's see, we got a text that came in. I think you covered it, but I missed all the info. I have a portion of my brother who passed IRA, and my accountant said I will have to pay taxes on that, plus cash that received. Does both get added to my income?
Not the cash.
Okay, cash is tax-free. Okay, if it was in a bank account, checking account, savings account, CD, cash tax-free. The IRA, you have 3 options. You can take it all out at once and pay everything all up front. You can take it out over 5 years, or you can annuitize it over your life. Why don't you give us a call on Monday, and we'll go over the figures and we'll run them for you, okay? And we're going to talk to John real fast before the show ends. Hey, John, how can we help you?
All right. Your previous caller talked about an IRA, and it assumed that it was in cash. What if the IRA for the beneficiaries is in equities? Do the equities have to be liquidated upon my demise, or what?
Well, the IRA is an IRA. Okay. What we were talking about is cash that's just in a checking account.
Right.
Okay, that's tax-free. If you just have cash sitting in an IRA, like you have it earning 1%, okay, you didn't want to invest in the market, that's still going to be taxable when you take it out. Your beneficiaries have the 3 options, like I said. They can take their share of their money out all at once. They can take it out over 5 years, or they can annuitize it over the rest of their life. The best thing you can do is make sure you list them as beneficiaries on the IRA, because otherwise it has to go to the estate first, and the estate's going to pay a ton of money. But what I would do, John, I'm going to hang up on you. I'm sorry. Give us a call at 632-7886 on Monday. We'll further discuss this for you so you get the right answer. I'm Chris Fabian from EG Tax. I'm here with Tim Eliason. Our office is opened a week from Saturday.
And join us Tuesday night, 5:30 at the new corporate office. We're having a Tax Tip Tuesday live in the office, and you can ask all these questions and more.
Yep. Until next Saturday, we will see you then. Bye-bye.